morning, and thank you for joining us here for this session on investing for a sustainable future. My name is Jessica Chiam. I'm the founder and managing director of EcoBusiness. We are Asia's leading media and advisory platform for sustainable development, and I advise venture teams on investment and strategy, so sustainable finance and investing is a topic very close to my heart. I'm delighted to be your moderator this morning here in Jakarta at the ASEAN Investment Forum and to be hosting this conversation with my very distinguished panel of speakers. Allow me to set some context for our conversation. The latest UN figures reveal that ASEAN investment growth last year reached a highest record of inflows of FDI or foreign direct investment, reaching $224 billion. This while global investment flows actually fell by 12% in the same year due to multiple crises like the war in Ukraine, high food and energy prices, as well as soaring public debt. So it demonstrates that ASEAN is a very attractive destination for investments, even if the global macroeconomic outlook is clouded by much uncertainty. But how much of these investments are actually flowing to projects that ensure sustainable development outcomes? We've seen headlines around the world on how our climate is in crisis. Extreme weather, soaring temperatures are now a frequent occurrence. We need to urgently accelerate this net zero transition, but to do so in a way that shared economic growth leaves no one behind. So the trillion-dollar question is, how are we going to achieve this? Sustainable finance and investing has emerged as the answer, and we need to urgently raise large amounts of funding from public, private, and philanthropic sources and to invest them with a clear ESG and sustainability lens. We've also seen ASEAN issue its sustainable finance taxonomy that seeks to create standards for sustainable finance. And investments made with these lenses not only help to build long-term resilience and create societal value, but they also help organizations manage risk and build competitive advantages. So in reality, all finance should be sustainable. We shouldn't have a separate category of sustainable finance. But this is exactly why we're here today, to have this really deep dive discussion about how we can scale sustainable finance in a massive way in ASEAN and globally. And on this note, I'd like to start off by asking Neil, what is the state of sustainable investing in Asia today and specifically ASEAN? And also, what is the premise or the key benefits of investing with such a lens, and why is it important?
Thank you, Jessica. Hello, everybody. I'm glad to be here in Jakarta at this conference. I'm Neil Mascarenhas, the Asia lead for the Sustainable Investing and Innovation Platform at Goldman Sachs Asset Management, based in Singapore. So sustainable investing in its earliest form was ESG investing with engagement, exclusions, and also an understanding of the ESG factors that were integrated into the investment process. And the aim really was to understand your risks and generate a return. But sustainable investing has actually come a long way since. It now focuses a lot more on socio-economic challenges the world is facing, like climate change, biodiversity loss, modern slavery, and also sort of analyzes the risks and opportunities in these areas. So for an asset manager, investing, or for an investor, investing with a sustainability lens not only helps them generate a good return, but also helps them direct capital to solve these challenges and create positive impact, right? And for corporates, what this does is it helps them understand their positive and negative impacts on society. It helps them future-proof their businesses, against, and I'm sure many of you all in ASEAN have heard about the carbon border adjustment mechanism in Europe. So it helps you future-proof your business against these challenges, as well as generate impact, right? How we do it at Goldman Sachs is we take an investable case around the two themes of climate transition and inclusive growth. And as a firm, we've committed about $750 billion over the decade to solve these challenges. And so far, we have deployed close to 50% of that amount, right? And it's a pragmatic approach for us, driven by what we see as changing preferences from both corporates and consumers. Corporates making commitments, and consumers allowing their social beliefs to change their choices. It's also about improving economics on existing climate solutions, which are reaching and causing tipping points. And finally, it's about all the impacts we are seeing on physical risk on society, or physical risk on society, and social factors as well. When it comes to ASEAN, ASEAN had a late mover advantage, right? Because they started much later than Europe, the US. But unfortunately, things stalled during COVID. However, over last year, that's 2022, and this year, you've actually started seeing things coming together. You've had the ASEAN taxonomy, right, which is for the first time viewing the region as one contiguous block and not just a collection of many different countries rather. You've got a common data platform which is being talked about. You've got impact metrics, which I understand Singapore is working on to draw capital to the region. There are going to be different disclosure regimes with ISSB coming up soon, with Europe, the corporate reporting directive. So there's a lot happening which ASEAN has to really catch up on. Back to you, Jessica.
Thank you so much, Neil. I'll come back to some of the points that you raised there. But Francis, I want to come to you because, your Australian ASEAN Association has a great view of the region. What is enabling these investment flows? And are there any specific examples or success stories that you can share?
Thank you very much, Jessica. It's wonderful to be back in Jakarta here. Well, first of all, I'd like to, tell you a bit more about my background in terms of my connections as chair of the Australia-ASEAN Forum. So Australia-ASEAN Business Forum was established in 2014 when Australia established diplomatic relationship is to celebrate the 40th anniversary of the Australia-ASEAN diplomatic relationship. And I was engaged by the ASEAN head of mission in Canberra say, there's a lot of talk about the importance of ASEAN, and yet Australians do not know the identity of ASEAN. We are ASEAN is the closest neighbor to Australia, and there's a gap. So the gap is how can we promote ASEAN as an entity? So I was the biggest guinea pig they can find in Australia, in the sense that I was born in Malaysia, brought up in Brunei, has got a Vietnamese wife, and traveling around in early days all around ASEAN country. So I was actually involved in staging the Australia-ASEAN Business Forum. But in answering to Jessica in terms of the success, one of the best success story I want to share with you today is that the timing of Australia connection with ASEAN now is perfect. Next year is going to be the 50th anniversary of the ASEAN-Australia relationship, a dialogue partner. And I know our Prime Minister is coming down here. Most probably is going to launch the Southeast Asia strategy. How can we engage closer with Southeast Asia? And hopefully that will be a blueprint of Australia-ASEAN connection. But interesting enough, as the 50th anniversary next year for the Australia-ASEAN dialogue, a lot of these leaders will be coming down to Australia. And I think this is where a lot of Australian companies can really see the benefit of ASEAN. I can see the benefit of ASEAN. A lot of big corporations are seeing the benefits of ASEAN. But this blueprint with the leaders going to be in Melbourne next year will really cement some of the opportunity, which I've been hearing yesterday at the first day of the forum, that there's so much of disconnect between what ASEAN is doing and connecting Australia, one of the closest neighbors. There's a lot of things that you're doing here that Australia can complement in terms of our technology, your manpower here, and the gaps in terms of sustainability, fantastic. The Australian government is introducing a lot of strategies, and very much I'll explain later on in terms of the importance of sustainable investment in this region here. So Jessica, I might move to the other parts of the conversation later on.
Thank you so much, Francis. We'll come back to you specifically on what hot areas that Australia is really interested in ASEAN. But I want to move on to Goshan first. Share with us a little bit about GGGI and the overview on sustainable finance in the region, and what is really hindering wider adoption in your view, and where are the opportunities?
Thanks, Jessica. Thanks for having me on the panel. So about GGGI is an intergovernmental organization. We have 47 member countries. We are very active in the ASEAN market, particularly linked to sustainable finance. I really think sustainable finance is perceived And the fact is that this is a new line of credit, and the one that is going to increase multifold going forward. So this is how investors are looking at it, as this is a new line of credit which brings in the commitment to sustainability, right? Because the user proceeds are then linked to what the future assets are going to look like, which is, of course, the green funding that we talk about. Now, what is really missing in the context of, or what is really needed, what the gaps are for these sustainable finance to come in? I would say there are three things. One is the enabling environment, right? The second thing really is about the capacity building for people to really understand what it takes to issue a bond, for example, right? What it takes to really look at creating sustainable bond frameworks, and then getting them second party verified for them to be, for the credit ratings to go up and the investments thus be de-risked. The third really is about the entire issuance process. So there is a little bit of a hand-holding needed, I guess. That is, of course, goes a long way. And that's something that GDGI does support to all the member countries, where we come in to support the issuance process. Not only that, I think the other thing that GDGI has experienced, so globally we've supported $8 billion of bond issuances. What we find now is after the first issuance, particularly when the reports, the monitoring reports go out after, let's say, a 1-year report or a 2-year mark, that really brings a lot of market confidence into funding the second round and so on and so forth. So it really is about building that confidence, that trust that the user proceeds are used in the right way, and then impact reporting thereon. So those are some of the key points that I want to start with, and of course I'll contribute more. But I really feel these three are the pillars on the back of which sustainable finance can flow into the countries.
Thank you so much, Gulshan. We actually ran a story this week on sustainability-linked bonds, and actually how many issuers are falling behind their targets because they can't, get enough projects and cannot get enough investment flows. And that's quite a sad reality. And I go back to the first panel where Tan Sri was sharing, why do we not have more ASEAN bonds? And I would go further. Why do we not have more ASEAN sustainability bonds? Because this region is perfect for that sort of investment. So thank you for sharing those perspectives. Grace, I want to come to you. As a founder of a sustainability startup, has this helped your fundraising process and the company's growth? And what are some of the impact metrics that you are personally overseeing to ensure these outcomes?
Yeah, thanks, Jess. Great to be back. Yesterday at the Ritz-Carlton to today here. Yeah, I think at Unravel Carbon, we're obviously a climate tech startup and enterprise software that helps companies to measure, track, reduce, and report on their carbon emissions. We have raised money from, for example, Alpha JWC, one of our larger investors. Thanks, Erica. But we had the opportunity to really choose the capital that would fund such a mission. We have a mission of reducing and removing 1 gigaton by 2030 through our work with our customers. That's about 5% of the global reduction target out of ASEAN, right? Today, the platform has, although made in ASEAN, it's already been used in 32 countries. And it's really interesting to see the kind of actors that are coming in. But in terms of your question, being a climate tech startup today is a premium. It is definitely a premium where you're able to attract capital from all sources, right? We are able to attract patient capital from impact investors, from climate tech focused VC funds, as well as generic VC funds, right? Some of the top tier 1 US and Southeast Asian funds are our investors. So our seed round was led by Sequoia, Alpha JWC, we're a YC company, and so on. So I think it is really a golden era for young people, for repeat founders, for experienced corporate leaders to come out with, into the world to start your own climate tech company, given, the background, the capital, and the networks that you have acquired. It is a very technical field, I have to say, whether you're in both hardware or software. It's a very technical sector to create real value. And yeah, we're just super happy to be, one of the fastest growing decarbonization platforms in Asia.
Thank you so much, Grace. I was also at the Ritz yesterday for the Climate Impact Innovations Challenge by East Ventures and Temasek Foundation, and it was quite incredible to see the innovation that's emerging from Indonesia in mobility, renewable energy, food and agri. And you're right, there's a lot of investment capital that's looking for these opportunities now. And in fact, if you look at the amount of money of investments, private capital that's flowing into climate tech in Southeast Asia, it reached a record 1.1 billion last year. So it shows that actually sustainable investing makes commercial sense. And that brings me to my next question, which is that, you know, in the past, we always had this view that sustainable investing will offer you inferior returns and that it's not going to give you a good rate and it's risky. But that conversation has changed drastically, even though some family offices and investors are still thinking with that mindset. How do we kind of convince people that it's not only the right thing to do, but it makes absolute business sense? Neil,
Yeah, so investing is all about risk-adjusted returns over the long term. And in the same way, sustainable investing has to be looked at as being able to invest with impact over the longer term. Because the eventual benefit is lower risk, you know, improved returns, improved longer-term sustainability of that business, improved competitiveness. And that is really what, you know, brings that commercial sense to sustainable investing. Yeah.
Do you have some examples to share with us in terms of globally what's happening in sustainable investment and how can ASEAN perhaps learn from these global examples?
Yes. So the idea is how do you bring private capital, as you mentioned earlier, to close that gap between the opportunity set and the financing that's available for it. So in ASEAN, the opportunity is about 200 billion a year. And the funding is around 40 billion a year. And these are numbers from DBS, where 75% of that is actually public money. Okay, the question is how do we get private money to come in? And there are certain insights which I've looked at and we as a firm also believe could drive flows to the region, right? So the first one is tipping points on existing climate solutions being able to solve the decarbonization problem in ASEAN, right? So a lot of capital over the last 10 years has gone into existing climate solutions like solar, wind, battery storage. And what that has done is brought down the prices drastically, right? So prices have come down anywhere from, say, 60 to up to 90%. And what this does is it increases adoption. So 87 countries in the world today have about a greater than 5% of their power being generated from renewable sources, including ASEAN, right? So the number is 23% for ASEAN, but if you remove hydro, the rest is only 5%. And we consider this to be a tipping point. From here, you can expect exponential growth in renewables going forward, right? And these tipping points have been seen historically. You've seen it in television, you've seen it in electricity adoption, you've seen it in computers, you've seen it in the internet. And as this tipping point is hit, innovations can scale here on. And that bodes very well for the transition in ASEAN. And it also points to what Tan Sri Majid spoke about, that we need to increase the amount of generation in ASEAN. And he pointed to Indonesia's plan versus what it's actually done. And private capital, seeing these tipping points, will be willing to come in to fund the transition. ASEAN on its own, if you look at the opportunity set till 2050, and BCG has given a number of anywhere from 4 to 7 trillion, with about 49 to 66 million jobs being created just in this area alone. That's number one. The second point would be transition and growing acceptability. So what we are seeing is that high carbon emitting companies who have a clear plan to decarbonize, as well as who engage with their investors and make green capex, are increasingly being included in portfolios by investors who are looking at transition beneficiaries, right? Earlier it was not the case, but now it's increasingly becoming the case. So this again bodes well for ASEAN with a very large manufacturing base and a general higher percentage of higher emitting companies. And these are companies in sectors like aviation, shipping, mining, and metals, right? So as they start to engage more with their investors, disclose, they start to get market sentiment moving in their favor. And finally, it'll be on natural capital solutions. ASEAN has a massive stock of natural capital, but it has to be really done right. High quality carbon offsets, understanding the opportunities for regenerative forestry, or even rehabilitation of existing mining sites. So we do a lot of work on the NBO side, that will be nature-based opportunity side, as well as we also manage a nature restorative fund with Apple and its supply chain. So what you can imagine the NCS stock in ASEAN being as an offset to global supply chains. That's one. And second is the first iteration of natural capital funds typically focused on South America and Africa, but we're increasingly seeing a much greater interest now in Southeast Asia.
Thank you for highlighting all those examples. There's a huge amount of opportunity here in the region. And I want to pick up on what you said about the role of public and private finance. And actually, the conversation around blended capital really has increased momentum in recent years. And we were meant to have Nina from AVPN join us as well to talk about philanthropic capital. And Gushan, perhaps I can come to you to talk a little bit about the opportunity for blended finance in this region and what actually has to happen before we can scale the blended finance.
Sure, thanks. Indeed, yeah. There's a lot of, before I jump into the blended finance question, I'd like to just continue on this topic of sustainable finance. Now, just to put things in perspective, you know, let's look at what projections are. Of course, one is risk-adjusted returns, but the other aspect of sustainable finance really is where the market is looking at, right? Particularly for ASEAN, energy transition is definitely coming. I mean, for the world, but particularly also for ASEAN. To put things in perspective, last year, $1.1 trillion was invested in renewables. First time that it was a 1:1 ratio on fossils. If we have to really achieve our global targets, emission targets that we've committed to, we need to step that up to 4:1 in the next 5 years. In the next 7 to 8 years, that ratio has to go 6:1. And beyond that, it is of course, coal is not going to go down all to zero, but let's say the trend has to go to 10:1 for if we have to achieve our NDCs and goals. So inadvertently, sustainable finance is the key because that is the transition. And now coming to blended finance is what blended finance needs to do, what philanthropic finance and others need to do is the lack of project pipeline. Right? When all this money needs to be invested, but invested where, right? So that kind of project preparation, technical assistance needs to be done to kind of prepare the projects which will absorb this money that needs to come in. And that I think is a real strength of blended finance, right? When you blend public capital, which has of course comes with a lot of strength, which you know, the policy, the regulatory frameworks, you know, and the private sector of course is key because they are the ones who would literally, you know, the hockey stick would only happen when private sector comes in. So the numbers are there. I mean, it's just the path that we need to tread. And I think the blended finance capital, the key thing really is how do we prepare those projects? How do we make them ready to absorb this money? Now at GDGI, this is exactly what we do. We try and understand. So you spoke about UNFCCC's report saying, well, okay, there needs to be projects on the line. And that's GDGI's job. We work with member states to prepare those projects and bring in international finance, development finance, or multilateral development finance into the countries. Particularly for ASEAN, we are working to actually identify the gaps and the opportunities linked to sustainable finance. We would be having those reports come out soon, but that's something that GDGI is currently working on to look at what the massive opportunities are and what is along the way. I'm particularly very optimistic, or something around a transition bond, you know, because and it's needed, right? The energy transition is happening. The world is looking at ASEAN, and the battle of you know, energy transition is going to be won and lost here, you know, in ASEAN. A very important player. So So I really believe that transition bond is the way to go, particularly for ASEAN.
Thank you. And you know, coming to Jakarta, and I love this city, right? But you see how polluted the air is, and that's a result of so many of the coal plants around the city that would be perfect candidates for the managed coal phase-out plans and transition finance. And right now, we have the mechanisms to achieve it. And therefore, you know, it's so important that we actually take that opportunity. Francis, I want to come to you because, you know, you've talked about the sectors that Australia is interested in to come to ASEAN. And many times, you know, in the previous panel, he mentioned that investing in ASEAN is dangerous because it's addictive, right? And I love that quote. And, you know, when we think about ASEAN as a region, there's a lot of conversation about how we can further de-risk it and how we can have longer-term investment horizons. How is Australia as a region looking into putting the money?
Yeah, it's interesting, you know, from an Australian point of view, looking into the ASEAN sustainable investment is risk before, because when you look at ASEAN as a very heavy industrial manufacturing area, so it's interesting how it transitions. And from Australia's point of view, because we are very environment conscious, we even have a green parties in the parliaments to make sure that everything is all right. But the Australian government realized that we have to bring the people with the community with this sustainable investment, because all this sustainable investment is a lot of jargons and hot air for a lot of community people. They do not understand. So that's why the Australian government will say, what is the whole issue about this sustainable investment? Because that's a journey. The end journey is to save the planet, be green. It's very simple. But normally you don't hear about that. So very important now. So the Australian government now come out with a new organization called Net Zero Economy Agency. So this Net Zero Economy Agency is part of Prime Minister's Cabinet Office, whereby it's set up to take the community, the financial investment, to make them understand that this is where we're heading. And there's a lot of incentive along the way to make sure that they will actually see the benefits. And already this filtering down to the corporate community, whereby now it's very fashionable to be associated with companies or corporations or investors who has got ESG compliance, because they could have a global footprint. So I think this is very interesting that our speed of going there is very fast in terms of catching up. But in terms of sectors, some of the key sectors which also involved with this climate change in the sense of renewable energy. We are very big renewable energy. We are talking about the hydrogen's capital of this region. There's already discussions or contract going between Australia, Indonesia, connect to Japan with Barabini, and also with some cable Indonesia. Vietnam is looking at very strong cooperations with Australia in terms of our research in the renewable space. I was in Vietnam just recently, bringing Australian company up there to look at renewable hydrogen battery, because you might have a lot of solar panel, you invest a lot of solar panels, send it to the grid. Most of the grid now couldn't take any more of this power in. And battery storage is very important as an investment. And Australia has got this technology to bring to this part of the world, whereby it can be more economically beneficial. So we are very good in that renewable space. The other areas which is very good is the agribusiness. As you know that Australia, when you go to Australia, customs is very strict. One of the things they want to check is the food. So Equis and the agri sectors is one that there's a lot of collaboration, I think, between Australia and ASEAN regions. And I know that in some of the countries in ASEAN, CSRO, which is our Australian scientific agency, now are helping a lot of countries in the Southeast Asia to make sure that they have got better yield productions, food security. If you don't have food security, you can't export to EU because the benchmarking is very high. So these are some of the R&D that we are very good in Australia. And of course, all of this has got the ICT sort of elements in that. And you know, one of the Indonesian company like Bukalapak actually set up the head office in Melbourne to link up to Bukalapak, Indonesia. So that sort of collaboration, I can see lots and lots happening. I was telling Jessica that we miss each other in Hanoi. I was just in Hanoi with the Australian company signing a joint venture agreement and how can we use the couple thousand of staff in Vietnam rather than core office to collaborate in terms of working with the Australian company who are very good in the program development rather than the back office. And the last sectors, which is very big in terms of Australia-ASEAN connection, is the health industry, because one of the areas that we could collaborate is our health, because in terms of health, and I know that Aspen Medical is doing a lot of work in Indonesia. I brought a lot of Australian company to look at setting up cancer center with a proton therapy. So these are areas which Australia will be very much be looking at stronger relation with ASEAN and the inroad to that. Thank you.
Thank you. Australia also has a very interesting development in the last week. They had a student who sued the government for not mentioning climate risk in the government bonds. And I think that's
students from Melbourne University, fantastic. And the world class case. And that's an example of risk, you know, that a government bond, you're not declaring the climate liability. And I think that's a lesson. And that lesson actually has echo to the business community that we need to be very careful in terms of your compliance and the language you're going to use in terms of your compliance ESG. So that I also represent a very big law firm in Australia, Minter Ellison. So we have an emergency meeting to make sure that we use the right language, because otherwise you'll be sued right, left, and center.
Yeah, and actually following on from that, the FT ran a very interesting story recently about how investors are far underpricing climate risk in their assets, and they are not actually thinking about, you know, the extreme weather that we're seeing, transition risk, physical risks, and that has a huge impact on the valuation of investments. Which brings me to my next question, and Grace, I'd like you to maybe share some perspectives on this. Is that sustainability as a premium, you know, how is that better reflected in the enterprise value of investments? Because in the past, it used to be that it was not reflected so well, and, you know, people thought if you do sustainability, there's a very high cost. But today, I think we're seeing that conversation change. And how have you seen that evolve?
Yeah, and I'll speak with actual examples, right? So when we look at the Unravel platform, it's used by 3 groups of people. The first group are regulators, central bank, stock exchanges in Singapore, for example. They used to measure themselves, but also to trickle down to for example, the MAS, involve 30 SMEs to be measured just to understand their carbon risk as well as their profile. The second group are enterprises themselves directly. So we work with Zalora, Mercedes, Salad Stop, you name it, where they want to know for themselves and report to their investors, their consumers, their stakeholders and employees. And the last group, which is related to your question, are PE funds. So PE funds are the most excited group of users of our platform, and we were also scratching our heads as to why, right? And we keep asking them, why are you paying for your entire portfolio to be measured, to be tracked, to be benchmarked? And there were a few reasons. Number one, the PE fund GPs believe they can raise more money from LPs because they are measuring the climate risk exposure of their portfolio companies. And a bonus would be that their portfolio companies are, performing above average, right? And we're able to show that. And therefore, these carbon emission reports are actually in their virtual data room. It's an actual use case of something that was, formerly very theoretical and so on. The belief there is that LPs would either, number one, allocate a greater quantum of capital to GPs who are future-proofing, not just themselves, not just, with knowledge and capacity building for the funds, but also to start measuring the climate risk exposure in their portfolio companies and doing something to mitigate that impact. The valuation, premium comes from, we just need to break down EBITDA, right? Earnings before interest, tax, depreciation, and amortization. Carbon and climate risk affects each of the alphabet, maybe except amortization, arguable, right? And very, very immediate one is the carbon tax. This is my 3rd ASEAN Forum panel in the last 5 days. Each each ASEAN forum has mentioned carbon tax, right? The first one with Minister Gan Kim Yong, Singapore's Minister of Trade and Industry. Singapore has introduced a $5 per ton carbon tax, and it will climb up all the way to $120, $150, $180 per ton. And when you model it to a company's carbon exposure, the penalty that is introduced by this carbon tax is not a joke. It's in the tens and if not hundreds and millions of dollars. That is an immediate hit on your valuation. So if, we talk about blended finance, but I would also want to talk about blended penalties, right? Blended accountability measures. You need the regulators, you need the public sector to introduce some of these systemic rollout changes, but you also need the private sectors to embrace that. So it's both carrot and stick. I think we are so screwed up as a planetary species that we need all carrots, all sticks to be used, right? And that blended penalty, blended accountability measure is also as important as blended finance.
Thank you very much, Grace. Yeah, I think we would love to see a carbon tax rolled out across ASEAN, and not just Singapore. And I think that would very much level the playing field. But most importantly, that tax actually would help to raise funding for investments into critical clean energy infrastructure. And I think that that's super important. Gushan, did you want to add?
If I may. No, I think this is a brilliant point. I cannot agree more. And one of the biggest impact at the EU is to bring in the carbon tax. I think that truly is something at an ASEAN level. This is going to be a huge impact if ASEAN can take that agenda forward and try and implement something similar. So completely agree to your point. The carbon tax is going to make a huge difference in the region.
EU has already introduced more than 1,000 green laws and green taxes,
exactly.
From plastic to carbon to water to
Sure.
There's no more negative externalities not being accounted for.
No,
it's been all accounted for. And what is ASEAN doing, right?
Yeah.
That is something really we need to leapfrog.
But that's the strength of ASEAN, right? That they have this power to create that and implement something like that. So surely something that we can look forward for ASEAN to take some measures. Thank you.
It just reminds me of what Tan Sri said earlier. It's like ASEAN, we need to just do it, better decision making, faster decision making. I want to talk a little bit about greenwashing, because there's no conversation around sustainability without greenwashing, and the sustainable finance industry has seen a lot of that. We've seen some European institutions taken up to task. We've seen financial institutions fined, corporates being called out. How do we safeguard against greenwashing in sustainable finance at the same time as trying to, encourage this large-scale adoption? Neil, perhaps you can take this.
So greenwashing is essentially when a company or a fund is saying they are either doing investing in sustainable activities or doing green activities, but not actually doing it, right? So that is basically what greenwashing is. It's not that your standard is high and somebody's not met your standard, so they are greenwashing. It's not that at all. So for example, in our green, sustainable, and impact bond portfolios, we reject almost 34% of all the green bonds in the developed markets that come our way. That does not mean that the bonds are not green. It's just that we have a higher standard there, right? So some of the ways we say, if you're an asset owner, some of the ways you can ensure that greenwashing is not happening with your external fund managers is by, understanding what their policies are, what their frameworks are, what are the different thresholds they are using, what is the strength of their voting policies, how good is their stewardship and engagement. If it's a portfolio company, you really want to understand, for example, if they are, doing green capex, how is it really affecting their margins? Is there any change in strategy at the board level? Because that's very important. The board cannot just leave it to managers to do. Thinking green and sustainability has to come from the board, because it's a change in business model, not just a tweak somewhere. We often look at our companies and we try and understand where are these green revenues, right? And because green capex typically is a leading indicator for future green revenues and sustainability in the firm, right? So if we don't see this happening, then it could be a candidate for greenwashing, right? And finally, even when it comes to regulators and policy, there's a big risk nowadays of carbon credits and carbon offsets becoming stranded assets. because in a way they are greenwashing as well. There's an example which has come out very recently out of LATAM and Africa, where 18 large forest restoration projects, which generated a potential of about 89 billion credits, they found only 6% of those credits were actually generated from carbon reduction and forest preservation, right? So in a way, that is lax regulation and I guess greenwashing in a way. So ASEAN has to be very cognizant and look for quality when they try and come out with regulations and policy to stop greenwashing.
Yeah, that is a super critical point because carbon credits have attracted so much controversy and criticism about its credibility, and therefore then the good projects suffer because the industry as a whole is not seen to be credible, and that is why I think the methodologies and the credibility of these frameworks really need to be robust. I like the other point that you made about boards. I sit on 2 listed boards in Singapore. One's a mobility company, one's agribusiness, and the conversations we have around the governance of these issues is tremendous, and it's changed so much from a few years ago, and today boards are sitting up and actually thinking, oh wow, how do I measure climate risk? How do I put a quantifiable impact on the financial impact of climate risk? And then what is my company doing about it? And the other angle as well is the institutional investors are now asking boards, what are you doing to build resilience? What is your decarbonization strategy? And then taking it a step further, what is the business opportunity? How are you positioning your organization for business growth and performance? And I think that is a really critical question that we all need to think about. But coming to the end of the panel, so I would like to kind of wrap up this panel asking you about this final question really, and that is, if there's one thing that you could change today that would move the needle on sustainable finance and investment in the region, what would be that one thing? Francis, I'll start with you.
Thank you, Jessica. And I think if there's one thing that that can make changes, would be to connect the Australia and ASEAN more closely. As you're aware that the economic ministers just recently signed the Australia New Zealand free trade agreement to a second level. And I think this is where with all the blueprints that you've written about the sustainable investment, climate change, and Australia is also going through the same journey as well. We are living in this geographical region of RCEP, and I hope that the next conference we don't have to talk about the distance and the gap. And I think this is definitely one takeaway that I want to leave behind. Thank you.
Thank you. Grace?
Can I be greedy and have 2? I'll be fast. I think, okay, the first one is to your point, right? The introduction of a uniform carbon tax across the entire ASEAN region, because no one economy wants to be less competitive with this additional tax in their country. The second one would be to tie companies' leadership compensation to the company's climate performance.
That's great. Thank you. Neil?
Yeah, what I would really like to see is more interaction and engagement with governments and state-owned enterprises, because this is a very, very critical part of the entire transition and financing, and we rarely ever get to speak to them. It's like a black box. So we need that engagement with sovereigns and with SOEs to be able to really move forward well.
Thank you. Gushan?
I would say readiness. I think that is truly the key, to be prepared, to have the right kind of enabling environments, to have the right kind of frameworks, sustainability bond frameworks, thematic bond frameworks, and the right kind of capacity within the organizations to receive the funding which is available to come in, and then to have a very strong pipeline. A pipeline that has the maturity and that has the value for the investors to come in and put in their climate finance.
Thank you very much. On that note, I would like to add also that we've heard from our panelists how to do it, and I would end the panel on just do it. So thank you very much for all your insights, and please join me to thank my speakers this morning. Thank you.